Hello, everybody, and welcome to this week's podcast for the week ending August 2nd, 2024. I'll be the first to say, happy August, Ian.
Happy August. Yeah, it's a lot of I'm getting tired of hearing it. Time's flying, summer's flying quickly.
But it is flying.
But it is. I guess people are saying it for the reason, right?
Yeah.
It's definitely been a lot of things have felt like they've been moving pretty quick, and the markets have felt like they picked up the pace in their movement recently. I mean, maybe I don't know if the old adage of like, hey, all the big players, the important people are out down by the beach. I don't know if that's the same carries the same weight as in 2024 as it might have a few years ago.
Right.
But nonetheless, things are certainly been moving pretty quick.
Oh, yeah.
It's been a lot more, a little bit of a pickup in volatility, both good and bad over the past couple of weeks.
You look at the winners and the losers over the course of July so far, or throughout July. Small caps really leading the way higher. Russell 2000 up about 11% over the course of the month. I don't know when the last time you were able to say that for small caps was. Really intense rally for the group.
Yeah, I mean, we saw small caps bounce pretty hard at the end of last year, right? So like the end, like November, December timeframe. I mean, they like massive rally up, along with other areas in global equities kind of bouncing after that correction that we saw at the end of October. And you saw the kind of market correct and small caps led the way out, which makes sense.
Right.
And then that stopped at the beginning of this year, right? I think everyone was calling at the end of last year, small caps are going to lead the way, like big rotation we're seeing here, big rotation. And then that came to a break and we saw the S&P outpace last year's first half returns in the first half of this year. Right, which I don't think anyone would have necessarily expected.
Right, especially coming out from such a strong year.
Yeah, and we saw, I mean, like you said, 10% up for the Russell last year. I mean, other stuff was, we've seen some large caps certainly post declines, but it's not like there's a bunch of red on the screen. I mean, the Nasdaq 100 was down over 1% for the month, which was the only red, at least on the screen that I'm looking at. So.
Oh, yeah. Well, I mean, you look at it and across the board, you're seeing our participation metrics move higher in what feels like a month where it shouldn't have, right? You look at the number or percentage of stocks within the S&P 500 that are in positive trends or are posting buy signals, that's moving up, right? The average stock in the S&P 500 is moving up, actually about 4.5% higher over the course.
Looking like the
equal weighted.
Yeah.
Over the course of July. So, you have this bit of a pullback, bit of an exhale for the growthier tech focused names, but at the same time, participation's improving. So I think there's really strong messages on both sides. On one hand, you have the average stock doing better. Bear markets aren't built on small caps doing bad and average stocks doing well. Right. While at the same time, you have a bit of a pullback for growthier names, but it seems healthy, right? Markets can't go up every day, right? So you have a bit of an exhale there, and it seems healthy to me.
Yeah, and I mean, you look at stuff like some of our participation indicators, like you said, like the positive trend for the S&P 500, right? So percentage of stocks in the S&P that are in a positive trend peaked at 76% in April, moving all the way up from like the 30s in October. I mean, just like big column of X's up.
Right.
We saw it begin to decline in May and then June, fell down to 66%. The last 2 days, it's reversed back up into X's and climbed back up to 74%. Right. So, I mean, even with some names moving down 5-10% over the past couple of weeks, some of the big like kind of mega cap areas and in India specifically, right? You did not see that translate over into broader technical deterioration from a participation standpoint. Right. And now some of the other areas are starting to pick up a little bit, right? Yeah. I mean, so you're not seeing that, hey, the thought leadership, and I think we talked about before a couple of weeks ago when we were talking about small caps of if only the generals are leading the battlefield, when they fall off, then there's not going to be anything left. Well, like that could be the case, but the other hand is, yeah, you could see the soldiers kind of come back in and back them up. And that's kind of like what it seemed like has happened over the past couple
weeks. The generals are getting some help. And speaking of the generals, just want to open up today's podcast with a bit of conversation before we talk more about our rankings and things like that. Just a bit of conversation about earnings. Of course, by the time that this podcast comes out for you all listening, the technical picture or the overall picture might have changed quite a lot for a couple of names. But talking about specifically two names that have already reported as of the time of this recording, Microsoft and Meta. We cover
Facebook or Meta?
I think it's Meta. I'm not sure. It might change tomorrow.
They didn't change that on the earnings call.
Yeah, no, they certainly didn't. But what did change was their price.
Yeah.
Towards the upside. Now, a lot of these technology focused communication services names, they have a very similar looking picture where they've ran into all-time highs up in the first quarter, maybe like transitioned into the second quarter of this year, fell out of bed a little bit, posted some consecutive sell signals, but have really found their legs. Netflix looks very similar to the technical picture of Meta here. So I think all in all, pretty strong technical picture. Earnings certainly gives a nice fundamental backdrop to that technical call as well. But remains a 5 for 5er, remains a strong name.
For Meta.
For Meta.
Yeah, and I think so. You mentioned Meta and Microsoft. So those are Microsoft reported after market close on Tuesday. Meta reported after market close on Wednesday, right, the 31st, right? And actually, if you look at those two stocks on a relative strength chart, I know we said we weren't going to talk about any specific relative strength charts, but I'm going to flip the coin a little bit.
Right,
Meta versus Microsoft, 3.25% scale, very consistent chart over the past several years. I might have used this in a presentation last week when we were talking to people, so it might have been something looking at there, but it showed big drawdown lower in 2022. Meta fell out of bed, right? Just got more than cut in half. I mean, really bad performance for Meta in 2022. Microsoft was bad, but not as bad. And then since then, Meta moved back to a buy signal against Microsoft in February of 23. And has gone on to post a second consecutive buy signal. And with today's movement, is reversing back up into a column of X's. It's a pretty consistent picture. Does that indicative of all that much movement between broader asset classes or sectors? Well, sectors, both of those stocks are pretty big weightings in their respective sectors. Right. So maybe a little bit, right? But it's not going to affect that much in the broader span of things. But it does show that you can kind of see, even though Microsoft didn't fall out of bed as much as anticipated Wednesday, right? After it reported earnings Tuesday, the post-market trading had it down quite notably, ended up just adding 1.0 on its chart. I mean, that Microsoft chart still looks pretty good.
Oh, yeah.
Right.
And I think that this can be a really good lesson between, using relative strength and using relative strength charts to pick between good stocks within a portfolio.
Exactly.
We're not sitting here and saying Meta is or Meta and Microsoft look bad. Or
the way that Meta grew its earnings relative to the way that Microsoft grew, it's like that's not our company.
Yeah, this idea is, hey, I got a portfolio of two strong names. Both of them are 5 for 5ers on the platform, and I think both you and I are in agreement. They both look pretty strong. But helping to use relative strength to compare stocks to each other and create another picture to say, hey, let's go and decide between these two names for this percent of my allocation XYZ. So just a bit of a use case for using relative strength to help pick stocks.
Yeah, absolutely. I mean, we're following the trends, right? Whether they're trends in specific stocks or in comparatives. I mean, the trend had indicated that Meta was the area to be over Microsoft for about like 16 months at this point, right? Which is not maybe what everyone would have always expected throughout that time frame. Right. And so that's just one example we've pulled out specifically. I mean, we could have looked at other things that would not have done, and of course we picked one for the podcast that looked pretty good. But that's one indication you kind of look toward when you're comparing some of this stuff. Like Miles said, it's always good to throw some relative strength charts, look at that, look at what the price movement is telling you, not necessarily what all the headlines are telling you.
Right. And I think that actually parlays nicely into a conversation about our rankings in general and what those guys are actually looking at. You put it nicely before, so I'll let you kind of open up that conversation. But looking at dollar rankings and what that's actually looking at, if we start to see some type of larger name rollover.
Yeah, I mean, you're going to put me on the spot here because I didn't know you're having me pull up quotes from the prior report. But when we're looking at our dollar rankings, which compare broader asset classes and then individually sub-asset classes separately against one another on a relative strength basis. Same kind of relative strength picture we were just looking at for Microsoft or Meta, but just let's look at asset classes stacked up against one another, right? So you have Nasdaq equities, commodities, international cash currencies, fixed income. Throughout the last month, so in July, we actually saw domestic equities pick up 6 signals, which was its largest signal improvement since February.
wait, what? I mean,
There you go. Cue the cue the
the
sound.
laugh track.
Right.
Yeah, that doesn't feel like it should have been the case.
No, especially when
How's
you
that
saw
work?
the S&P only up 1.5%,
Right.
right? I mean, but so when we're looking at that, it goes back to that conversation on breadth, right? We're looking at domestic equities as an asset class. We're not just looking at the S&P 500.
Right.
And so if you see things like small caps pick up, you see things like equal weight pick up, right? You saw growth kind of underperform, but some other areas kind of picked up the slack. I mean, that breadth improvement leads those relationships from some of the small caps, some of the equal weights, to all of a sudden beat other areas. Maybe they beat domestic equities, maybe not, but maybe they beat commodities, maybe they beat international equity
Right.
when they had it before. And then that allows the domestic equities asset class to gain more strength or gain more momentum, frankly, throughout the month of July. So I think that's an important thing to keep in mind. Obviously, there's a lot more to the domestic equity market than just the S&P 500.
Yeah, you stole my jokes. And now I got another. I was about to say, are you about to tell me that there's more out there than just SPY?
And we'll just finish each other's sentences.
Yeah.
That's the best. Yeah. But you see that on the sector perspective too.
Right.
Right. I mean, when we're looking at, we do the same rankings for the 11 sectors of the domestic equity market, and technology, even though the biggest technology names pulled back notably in July, the sector of technology added an additional signal in its favor. It was already number one. It's just number one by a wider margin after July, which frankly, I wouldn't have guessed before seeing that, you know?
Well, and I think that just adds, I like to, whenever I'm looking through my analysis, I like to create this, shout out to our quarterly report, this weight of the evidence, right? I kind of look at the good and the bad, and I say, okay, well, the markets are looking good. There's the technicals are on our side. The large guys are driving us higher, but maybe the bad would be before this month, there's not really that much of that supporting cast that we referenced before. Now it's, okay, well, the big guys are taking that healthy pullback that we're seeing, and then we're getting that supporting cast back. So there is more of a backdrop. So I think that that's just more to that positive way to the evidence that we're seeing.
And I think what you said is important. The word you used, the big guys are taking that pullback. They can take it, right? If the small caps saw that kind of movement when they were already down and they fell another 10%, it's like, ooh, that's not great. The big cash heavy mega cap names, they can take a little bit of a hit, right? And when we're looking at earnings stuff, I mean, I think it's interesting to note, obviously a lot of the sector improvement we saw over the past month was financials. Right. And so we saw financials gain the most relative strength of any of the sectors in our dollar rankings. So it wasn't third, now just more firmly in that third position, kind of closing in on industrials to that second position. Might be interesting to monitor. A lot of small caps, kind of regional banks representation there within the financial space. It was also the financials stocks always kind of report first. Right. They all kind of reported on the sector gain strength. So the earnings headwind or the potential volatility, I mean, you mentioned there's some big names on the earnings front, which might report very different earnings than the banks, right? But it's always just important to kind of keep that in mind, that just because things might be bad, that doesn't mean it's necessarily going to have to be.
Yeah, and I also want to add in, Ian and I aren't naive, nor is the rest of the team. There's so much more in play than just technicals here. Of course, when you look at things like small caps, namely regional banks and things like that, you're going to have the whole rate conversation coming into play, getting rate cuts sooner rather than later. That's going to be a tailwind for those guys. So if you get any economic data that suggests that those might not be coming as soon as September in this case, then that could be a headwind that isn't there on the chart just quite yet. So keep that in mind when you're looking at this stuff. You see constructive action technically. There is more in play, of course.
Right. And like when we talk about the price movements, like everything filters down to the price movement unless it hasn't happened yet, and then it can't filter down to the price movement, right? I mean, we're trying to follow the trends, and if we don't, then something could happen that could change those trends. But at least up until now, there's definitely some pretty interesting points that we'll continue to monitor. We didn't dive into fixed income, but I mean, it is interesting. The AGG outperformed the S&P for July. So maybe we'll leave that as a teaser for a future.
Somebody else can cover that
future conversation. But to your point, I mean, we saw rates backed off. That you would expect rates lower, the bond prices go higher, right? And so fixed income still down at the bottom of a lot of rankings, but it's been down at the bottom for a while, right? And so it might maybe could consider looking towards some changes there, or at least be on the eye, keep an eye out for changes in the near future.
For sure.
Cool.
Do you have anything else that we didn't cover?
We're just jinxing each other and finishing each other.
I got to know the most important question of them all that I'll ask you today. Who do you have for the Hall of Fame game?
Is that today?
Yeah, that is today.
Did not even know that.
It's Texans and Bears. It's going to be a barn burn, right?
Yeah, if it was a regular season game, I think I know who I'd go with. But DJ Moore just got a lot of guaranteed money, so maybe he's going to come out and put on a show for the fans. Who knows?
Who knows? I really don't even care. We're waiting for our Saints. This guy's wearing a wonderful Louisiana Roback polo today. I'm very jealous of it. But the Saints, what do you think about their chances this year?
We don't have enough time to go into that. I am hopeful, but not expecting much. Put it that way.
I'm probably the same.
Yeah, but definitely pumped for football season. And those that are pumped for the fall in general, do want to give a shout out as well to if you want to come see us in person, maybe not necessarily Miles and I, but maybe some other people talk in person. We're having our annual fall conference that we've rebranded to Catapult. So Catapult 2024 is going to be held in Nashville, Tennessee, October 15th through 17th of this year. We've opened registration. We've got really strong responses on registration. It's been a really good feedback so far, and we're excited to see everybody in Nashville. We have put a cap, though, on the early bird pricing. So we have slightly reduced pricing right now. In a couple weeks, that reduced pricing is going to come to an end. So prices will kind of go back up. So be sure to, if you're interested in coming, be sure to sign up soon and take advantage of that early bird pricing. Yeah, can't miss out on Nashville. It'll personally be my first time there. I'm really looking forward to it. I'm a country music guy, so we'll see. That should be a lot of fun. And I'll add to that, beginners and veterans alike are welcomed here. We take you through step A to step Z. So taking you from, just learning to hopefully being able to get out of there being an NDW expert, let's say. Yeah, absolutely. All right. Well, that'll do it for us. Hope everyone has a good week, a safe week, and we'll chat again next Thursday.